So we're going to put some fun in new funds today. First off, what I'd like to do is really start with talking about what are returns in Western European private equity and venture capital. And so what we would say is European private equity is looking pretty good. If you are a fund that is in the top half of Western European private equity, your return has been gathered up over a 15, 10, 5, and 3 year, and wow, you are looking down at the rest of the market, which is fantastic. There's $140 billion of dry powder that's going to leg into the European private equity market over the next 4 to 5 years. A lot of the new funds that are being formed today are being formed by folks that maybe were part of a plain vanilla private equity strategy, either got frustrated because maybe they found a thread that was really yielding competitive advantages, left and started a fund with a more distinct and discrete focus. You need to be willing to make room for new funds. New funds have a lot of reasons for being. They're very aligned with return, they're focused, they're hungry, and they clearly are showing up in the winner's circle. What you see is across 4 sectors: consumer, financial services, healthcare, and technology. For those managers that are highly focused in these spaces, 70% of their capital is being invested in these sectors. There is significant outperformance to be had by a focused investor who builds an entire firm around a single competitive advantage. This one, in this case, being sector-focused investing. Many of the firms that are focused in these sectors are below $1 billion in size. Now, not all of them, and we all can probably name them very quickly, the ones that are above that flight deck, but I would say many of the funds that are in these spaces are below $1 billion. They're usually newer platforms. Long-time listeners, first-time callers is what I usually say to refer to them, because this kind of outperformance is not something a rookie can usually deliver repeatedly. Sector-focused funds lose less money than the generalist funds off to the right, and they make more money on the upside as well.